Good afternoon, everyone. Hope everyone had a great day of trading. As you can see from my portfolio, I had a pretty good day. Again, up 3.95% for the day. Very volatile day, though. As you can see, had a big up, big down. At one point, it was in the 29,000 range. Low, for ups and downs. Anyways, I'm just doing this video because to redo a video I tried to post this morning, but the sound quality wasn't the greatest. So definitely redoing and going over to the information that I really want to get out, which is what is my strategy into picking call options on cannabis stock, and like why do I do it? So first answer is why. Why do I dive into options contracts? To do that, let's look at one of my largest holdings here, MJ ETF. As you can see here, the portfolio diversity is 31%. So about a month ago, my portfolio diversity in the cannabis industry was close to 38-39%. Very not diversified at all, very dangerous, and I could very much lose it all, which actually you can see why my year growth was so crazy, because I had such amount invested into one industry, one sector. So I wanted to get a little bit more diversified. So that's one of the reasons why I sold off my shares, not in MJ ETF, I sold off my shares in Kronos Group. At one point I had over 220 shares or something in this group, and I sold off most of it and used that money to buy options contract. So that is why I do it, is to mitigate risk, because when you purchase an options contract, let's go to the purchasing one. Here we go. When you purchase an option contract, let's pick this $14 call, because this is the one I was talking about this morning. The most you would lose is the amount you paid for it. So here, my max cost is $185. So even if the share goes to zero, I only lose $185. If you bought shares in this, if I had, a bunch of shares in this and it goes to zero, I would lose all that money, right? $1,000, $2,000 in shares, etc. This way, I only lose $185. So that is the reason why. It also limits my gains in it, and I don't actually own the share. So that's another thing about options to go about. But definitely don't want to talk about that at this point. Want to go more into the strategies of how do I pick the options contracts I do pick. So let's talk about this $14 share. So before we go into that, let's talk about the $14 share I sold off this morning, as you can see here, at $291, right? So that was what I sold off this morning. I bought this contract here, here we go, at around $30. I bought 3 of these contracts, so my average price was around, I think, $43. So either way, a lot lower than what I eventually sold off for in 291. So I made quite a chunk of profit, right? And how did I know that to pick this contract, right? Like, there's a lot out there. How do I know to pick on this one? So what I did was, again, go back to the trade options. Let's pick the $14 call. So right now, the share price for Kronos Group is selling at $12.32. So that's very important to know. So in the top right corner, you have this line graph, and you click on it, it takes you to a very important screen that has very important information. So the first important information, I'm going to do a quick screen write, is this break-even amount. So $15.85. That means by October 19th, this stock has to go above $15.85 for me to make a profit. And that is because you have to add in the amount it costs to buy the contract, $185, plus the current, and then plus it has to go over $14. So by doing that, you have to be at $15.85 to generate a profit. All right, so that's number one. Number two is you have this implied volatility. This is another very important number right here, which is 174%. Implied volatility basically means that traders like myself, like yourself out there, believe that the stock can increase 174% or it can decrease 174%. Very volatile. That is a very, anything above 100 is extremely volatile. So it basically means you can lose it all. Good thing with options contract, you only lose the amount of money you bought the contract for. But for people who actually buy the stock, you can lose the whole thing. If I bought $2,000 worth of stock and Kronos Group goes down to 0 pennies, I would lose all $2,000. So very volatile stock. But you can also go very up 174%. That's what this is implying. So now like the volatility, you can't just go, oh, the higher the volatility, the better, because again, you can lose it all. But let's actually do some math and what does this volatility actually mean. So I'm going to do split screen. There we go. Again, share price was at $12.40. implied volatility $175. So $12.40 times 175.06% is $21. So it's the stock can go above $21 or below $21, right? You are below, you're at zero. If you're above, so add it to the original $12.40, you're at $34, right? So you have to ask yourself, from now until October 19th, will this stock reach above $15 at a max at $34, right? Which is a pretty large range, or it could go to zero, right? So this is a question you have to ask yourself, and then you're like, well, how do I answer this question? So I answer this question by doing some research. And the reason why I believe it will continue to go above it is based off this idea that in the marijuana industry, we have a very specific date. October 17th is a very important day in Canada where full legalization will occur. So because I know this date is happening, I know that the more likelihood of this stock increasing closer to this $34 target is happening. So that's the research I'm doing, right? If you pick another stock, let's pick one that isn't as volatile. Let's bring this down. Let's do very non-volatile stock, Coca-Cola. Very non-volatile. Let's go to their options. October 19th, same date. Select this. Implied volatility here is 11%. You see the difference. Very minimal. It means 11% above or below. And I have no clue if Coca-Cola will go above or below this price stock by October 19th. I have no research. I haven't done any. And if I did know something, I'd think, oh, Coca-Cola is going to merge with Pepsi or something, and I think it's going to go above, I would be buying this options contract. But I don't know anything, right? I know with Cannabis, with Kronos Group, that October 17th is coming, you know, and the likelihood of it increasing to that $34 target, I definitely don't think it's going to hit $34, but I believe it will go above $14. It's at $12.31 now. That for sure I do believe, and so therefore that leads me to purchasing the contracts. However, as I said in another video I just posted about an hour ago, I do not intend to purchase any options contracts at the moment, because I think, you know, today was a very good day for Kronos Group. It went above 9.78%. I believe the sell-off will be happening. I believe this is heavily bought, and sell-off started to happen towards the end of the day, as you can see here. Negative 8.32%, negative 5%, etc. I believe it's going to happen even more. It's more and more sell-off that you see is happening. People are selling off, traders are selling off, locking in their profits, and it's going to continue to go down. So I'm looking for this price target to go back down to around the $10 range. Then I will be purchasing a lot more options contract around the $14, $15, even $19 range, right? Like, those are more bigger gambles. Your profit earnings are a lot less, but then the cost of those contracts are a lot less compared to, you know, the lower the strike prices. So, but I will be doing all of those just because I think, you know, like I said, the market is very volatile and it's headed toward this October 17th day. So that's pretty much in a nutshell how I go about purchasing Cannabis options contract. I have purchased other options contract before, and I had no clue what I was doing. I didn't do any type of research. I was like, oh yeah, for sure, you know, like Facebook should hit this number. I had no reason to believe it hit number, and then, you know, and Facebook tanked, and then I lost all the money, you know, because if, you know, once the expiration date happens, if you don't sell the contract and you don't exercise it, the money goes away. So I've lost money that way in the past. So this is now how I do it. It does take some research, and, you know, doing this saves you in the long run. All right, if you have any other questions around options contracts, please leave them in the comments below. Thank you.